So this is the wrap-up for the live market open for Thursday, April 14th. The market mood is positive, stocks are rising, and the dollar likes it. It's a repositioning after many long days of dollar sell-offs. And a reaction, sort of, it could have been worse reaction to the retail sales numbers, which weren't that good, actually. There was no talk of a recession, so yeah, could have been worse. Anyway, specifically in Asia, we have Singapore surprising with an easing of monetary policy. The Singapore dollar slides, and there's speculation about other Asian central banks. And yeah, stock markets are up. Yesterday, we had a miss in industrial output in the Eurozone, but it wasn't that important. As I mentioned, retail sales in the US did disappoint, but there were some positive revisions, some silver linings. Not good enough, in my opinion, but the market probably expected something even worse. PPI, Producer Price Index, missed. That could be a hint for for a miss today on the CPI numbers, but you never know. Last time they beat expectations. Crude oil inventories came out more or less as expected, and we had that symbolic drop under 9 million barrels a day in US production. The Bank of Canada was optimistic about growth, especially this year, a bit less about next year, and they did warn about the Canadian dollar. The Canadian dollar is sliding, mostly on the strength of the US dollar and also oil. The Fed beige book also contributed to a positive atmosphere because there were no negative surprises. There are no big warnings from the Fed. These are the figures that the Fed has before its eyes towards the next decision. And Australian employment came out slightly better than expected. Not perfect, but it helps the Aussie mitigate and counter the US dollar storm. Let's look at charts. Euro dollar this morning extending its slide. The slide began before the US figures yesterday. It began in yesterday's European session. Now we're seeing an extension, an attempt to move under 112.50. The next line of support is 112.15, followed by 111.50. Resistance at 113.35, which was the bottom of the previous range. Pound dollar resumed its weakness, falling quite a bit. 140.50 remains very strong support, followed by 140. 141.25 is some kind of resistance, but more significant cap is at 141.75. Dollar yen rising after it made the break above 109. The next level to watch is 110. Currently, we're stable. Okay. Dollar CAD, it couldn't break below 127.50 and made the move back above 128.30, which was a very strong line in 2015. Next line of resistance is 129.30. Oil prices are now stabilizing above 41. We'll have lots of headlines from Doha regarding the Doha meeting on Sunday. The capital of Qatar will see a meeting between Russia, Saudi Arabia, Iran, and other oil producers. There's a 50-50 chance, according to the last headline I read, about getting an agreement to freeze. I have lots of doubts if they will actually reach an agreement. Perhaps if they don't reach any agreement, oil will collapse on Monday. Even if they reach an agreement, the proof is in the pudding. Implementation could be hard. We'll talk about that, of course, tomorrow and on Monday as well. So the Australian dollar, looking a bit better at the moment, up on the day, very, well, marginally higher. Yesterday, it made a move towards resistance at 77.25 and couldn't make it. Some support at 76. The Kiwi dollar staging a fall. There was the Reserve Bank of New Zealand reached the conclusion that in the previous decision to cut, there was a leak, and they decided not to share information with journalists anymore. I don't see the correlation between that and the fall of the Kiwi. It's more of the US dollar strength, but if you have any other explanation, I'll be glad to hear. Anyway, 68.20 is support, working very well for now. 68.80 resistance, further support at 67. Okay, events for today. I once again invite you to our live coverage of the Bank of England. That's at 11 GMT. I believe they will be dovish because of the Brexit danger. and because the UK economy might be slowing. Let's see, the biggest surprise could be that one member even votes for a rate cut. That's more likely if and only if the UK decides to leave the EU. Before that, we have the final CPI figures in the Eurozone at 9. No changes are expected. Remember, we already had the preliminary numbers out, so these are the final, less important figures. I mean, the release is less significant. At 12:30, big event probably for today, is the US inflation data. Core inflation, most important figure, is expected to remain at 2.3. I suspect because of the PPI release that it could be a bit softer. We also have the weekly jobless claims expected to remain more or less the same at good levels. The US labor market is looking okay. Jerome Powell talks at 2 GMT, Federal Reserve member. And in the middle of the night, Chinese GDP, industrial output, retail sales, a big bulk of Chinese data. It doesn't matter that everybody casts doubts. What matters is what they tell us and how the market reacts. 6.7, 6.8 is on the cards for GDP. But remember, figures need to move. Because we have so many figures at the same time, we'll need other figures to move in the same direction, either positive or negative, to have an impact, first and foremost on the Aussie, but also on the general market mood. Currently positive, but it could change as well. Okay, so that was a long wrap-up for a long show, because we had lots of things to talk about. The week became calendar became much busier in comparison to the beginning, to Monday and Tuesday. Another question here. If CPI comes in weaker like PPI yesterday, that could take the wind out of the dollar. Yeah, because we had around 24 hours of significant US dollar strength across the board against majors, minors, safe havens, risk currencies. So maybe after this wave, we'll be reminded why Janet Yellen was dovish and that the Fed is in no rush to raise rates. So yeah, if we'll have a significant miss on the CPI, let's say 2% in core CPI instead of 2.3 expected, that would sort of cast doubts about the pickup in US inflation, which is source of concern for the Fed. Okay, so that's it for today. Thank you very much, everybody, for coming and for the great questions. I wish everybody success and see you tomorrow. Thank you and bye-bye.